The engulfing candlestick is one of the most powerful and easy to spot signals in all of chart analysis. If you want to understand how a simple two candlestick pattern can signal a huge momentum shift in the market, this video is for you. We're going to break down what it is, the powerful psychology that makes it work, and how to trade it with a clear, actionable strategy. So what is it? At its core, the engulfing pattern tells the story of a hostile takeover. For a bullish engulfing, first you need a downtrend. The pattern begins with a bearish red candle, and then you get a much larger bullish green candle. This bullish candle completely engulfs the first candle. This is a visual sign that buyers have stepped in and completely taken over sellers. For a bearish engulfing, it's the exact opposite. You'll be in an uptrend, you'll see a small green candle, and then a much larger, overwhelming, engulfing bearish red candle. It means sellers have completely overwhelmed buyers. The rules for this are really simple. It's always two candles. The body of the second candle has to completely engulf the first candle. The two candles are opposite in color, and for the signal to be valid, you really want it to be as part of a trend. So why is this so effective? What's the market psychology behind it? And it all comes down to trapped traders. Let's picture a bullish engulfing forming. Sellers are feeling really confident as price is starting to fall. Then, out of nowhere, a big green candle shoots up. This shows us that buyers have really stepped in at this level and are starting to change the momentum to this market. All of a sudden, all these sellers get scared, and all the sellers start to get really nervous. They feel trapped in a potentially losing situation. All these sellers start panic buying back their positions, and they end up contributing to the upward trend. A bearish engulfing is the exact opposite. A bunch of buyers came in, they felt really good, they hit a level, a lot of sellers came in, and a lot of the existing buyers decided to abort their position. The engulfing pattern is the footprint of this turnaround. Quick pause. If you're enjoying this video and getting some value out of it, hit the like button. You could also subscribe and see more content from me. Okay, back to the video. Okay, so knowing what this pattern isn't really enough to trade with it. You need context and confirmation. Context is all about location. Any engulfing pattern is going to be a lot more significant if it forms at a key support or resistance level. Another important thing to remember about engulfing patterns is that on higher time frames, they're going to show up as pin bars. Something might look like a bearish or bullish engulfing on the 5-minute, but then on the 15-minute chart, all of this gets condensed into a pin bar. So you can really trade them in a lot of the same scenarios, and you're looking for the same things. You're also going to want confirmation. That means you really want to wait for the second candlestick to fully close before you make any decisions. The pattern isn't formed until both candles are complete. You really want to wait here. Finally, check the volume. Oftentimes when you see these engulfing patterns form, you'll see it with a big increase in volume. That's going to show you that there's a lot of strength behind this move. It's much more likely to go somewhere. An engulfing pattern at a key level with a volume spike is a really great setup to look for. Okay, so how could you build a really good setup around this? You can enter a trade after the confirmation of an engulfing pattern at a key level. For a bullish engulfing, you're going to enter at the next candle and set your stop loss right below the bottom of your engulfing pattern. This is going to give you a really clearly defined risk on your trade. Your profit target could be the next major resistance level. The most important part of this is to have a complete plan before you enter your trade. You want your entry, your stop loss, and your profit target all figured out before you commit to the trade. No single pattern is a magic bullet. Disciplined risk management is what's going to keep you in the game long term. So to wrap it all up, engulfing patterns are a lot more than two candlesticks. They signal a real momentum shift, and they tell you a lot about what's happening psychologically in the market. A bullish engulfing shows you buyers taking control from sellers, and a bearish engulfing shows you sellers taking control from buyers. But remember these keys. You need more context and you need more confirmation than just this one pattern to make your trade. Look for this to happen at major levels, wait for the candle to close, and look for a spike in volume. Using a disciplined trading plan, this can be a really A-grade setup to have. Thanks for watching this complete guide to engulfing candlesticks. I hope it was helpful. If you want to see me explain other concepts in day trading, I've got plenty more videos. I'd also love it if you could like and subscribe. Either way, my name's Andrew, and I'll see you around.